Well, Mark Lackey's here. He's the CHF Capital Markets Executive VP, and Mark and I have had a debate about oil and gold for as long as I can remember, and I said that both were biased to the downside, and so far I've been right.
Well, in fact, Pat, I think that on gold you've been more correct than me. On oil, I did say 85 was my bottom, and I've said that for the last couple of years.
And I actually said 75, and we got to 85. Yeah. We're virtually at 85 now.
And I think, Pat,
so are you saying this is a bottom for oil prices?
Yeah, I do, but let's assume that maybe you're right when we go down to 75 for a month or two, because seasonally, October and early November is seasonally weak time period for oil. So I'm not too surprised because I've seen this the last 3 years, and we have held 85, but it doesn't mean this year we'll necessarily hold it, but I'm not worried about $60 or $65. So if you think 75 and you're suggesting that could be the bottom for a little while, then I think, Pat, you take a different approach on these oil services. And one of the reasons today I'm pushing frac sand and liquids is because those are two areas growing dramatically, and they're not going to be affected a whole lot by whether we're at 75 or $85 oil, because they can make money at lower levels. It's the oil sands, the North Sea, some of those guys have to be a little more wary, and if you're investing in service companies that relate to those areas, then I think you've got to do more homework.
Okay, so we are talking about oil and gas services. Your fundamental position, though, is that oil will trade between 85 and 105.
That's my view, right.
Okay.
But the point, Pat, that I would make here today, one of the reasons I am picking the oil service areas I'm picking, frac sand again, as I say, liquids, is because that growth is phenomenal, and that will keep going even at $75 oil. Now, if we got to 60 or 55, then I think we have to start to rethink the whole oil sector. But I think, and I think you would agree with me, that's a pretty unlikely scenario.
I'm inclined to do that only because you'd have a lot of shut-off capacity coming in.
That's the point.
But they're getting a lot of oil out of the ground as it stands right now. I mean, there's supply coming on, right?
Well, absolutely, and the supply that's coming on is the very supply that we like. That's the whole point. It's coming out of the fraction, the fracking areas, so it's tight oil, tight gas, shale oil, shale gas. Those are the big growth areas. The guys that are at risk, as I will go back and say, I think some of the North Sea, some of the oil sands, some of those properties that are marginal throughout the world that really do need $85, $80, $90 oil. The question is, if they shut in, how far below 75 will you go? Because some of that supply you're talking about will leave, Pat.
Yeah.
Yes, some of the newer supply that can still make money enters, but there is a significant amount of supply in the North Sea and in the oil sands that will leave the market if we go down to 75 and stay there for any time.
Well, and you know, geopolitics might be at play. Saudis get it out of the ground at $15. They just, if there's
Russians
a problem,
get it out at 20.
You want to drive the rebels out of business, lower the price of oil. That's how they're getting funded.
Yeah, I mean, there is some truth to that. But I think at the end of the day, OPEC has enough strength too. I mean, if the Saudis want to, do they want to see $75 oil? I mean, they could cut some of their production back tomorrow and not hurt themselves. So it really depends. I mean, having been in the oil business 10 years, I have the feeling a lot of people would not be happy in some of the producing countries if we saw $75 oil. But again, I think there's a solution here. If you still want to be in oil services, then we can offer you the solution at that price.
Okay, before we get to that, we will. What about natural gas?
Well, you know, same thing, Pat. I mean, I'm saying 375 to 4.25. I do like the fact that industrial demand has continued to grow in the United States and Canada. And also, we're seeing natural gas backing out lignite, partly because of legislation. I mean, some of the poorer quality coal is being moved out of the market by natural gas. So again, if you think gas is going to go below 375, then we do have a solution here. I don't think so, but again, there is always the possibility that if the world slows down more than we think, then industrial demand slows down in North America more than we think.
And we're too far, I get that picture, and we're too far away from LNG to have an impact, but eventually it will.
Oh yeah, I mean, I think, Pat, that if we look at 4, 5, 6, 7 years, I think natural gas price will be considerably higher. Because I do think some of the LNG will take place and some of the pipelines will be built. There is some opposition. I don't think the opposition is nearly as strong as it is to an oil pipeline. So I do think natural gas prices, if we were to talk $5, $6 down the road in the future, or maybe even higher, because you're still getting 13 to 15 in China.
Yeah.
And Japan. So there is an ability to equalize those markets to some degree. Yeah. So I am long-term pretty bullish, but I recognize here in the short run, Pat, we do have some weakness.
Okay, so now your recommendation is to stick with services that will play into that. Victory Nickel.
Right, so Victory Nickel, people say, well, that's a nickel company. It has been in the past, Pat, but as I pointed out last time I was on the service show here, that these guys, a few years ago, went into the frac sand business through their company, Victory Silica. Now, a lot of people aren't aware of that, and it's obvious by the way the stock's trading that many people aren't, because they are the only Canadian company that's listed on an exchange that's actually producing frac sand. Okay, so they've started their production back in the summer. They're going to show some pretty good cash flow in the next quarter here that comes out in November. And I would say, Pat, if you hold with this company, because the stock price has gone down some, I put it on at 50 cents. It's now, I think, 38. I think if you hold with a company like this, you're going to do extremely well over the next few years, because I could see them getting up to, in the next year or two, 40 million in cash flow.
You know what I think it is? I think that people don't understand what frac sand is.
Yeah, and we could say pretty quickly, Pat, the reason you use liquids in frac sand is that in these formations where you go in and crack the ground and the fissures.
So you're injecting.
That's right. You're injecting under pressure. So you don't have frac sand, water, or liquids. Then when you break up all this rock, you won't get the oil to flow freely. But when you use these products, then all of a sudden porosity improves dramatically. And that's what's changed the whole technology, is that when I was in the oil business, we couldn't get this oil out because we didn't have this kind of, we had fracking, but we didn't have this capability.
Yeah, so it's not like playground sand. It's a special kind of sand.
Well, yeah, it's a special kind of sand. And what makes what they did at Victory Nickel, I think, a brilliant move was that they got in there before all the frac sand properties were taken up. Oh. And that's high quality in Wisconsin. So yes, you've got premium sand. They've got about 70% of the Medicine Hat business right now. So I think once they start to show more and more cash flow and earnings down the road, people will say, hey, this is a great opportunity. But it's like everybody's from Missouri these days.
Yeah, show me. Yeah. What about NPAR Technologies?
Well, this is a little bit different, Pat. This is a company that came up on my screen recently, even though I've known about it for a while. But they're really in the water remediation business. So what they do very well is they have
remediation.
Okay, so what's that? Okay, basically, let's take the problem that's been talked about recently, both in North America and Europe. It's ammonia in water at industrial and municipal sites. And we've now come to the conclusion, a number of countries and jurisdictions are saying we're going to lower the amount of ammonia in water. Well, to do that, you have to use one of two processes. NPAR has an electrical chemical production, and a lot of their competitors are biochemical. Now, why is electrical chemical better? Because it works in cold weather. Biochemical doesn't work in cold weather. Well, if you're in North America or you're in Western Europe, you need a different approach than biochemical. You need NPAR's technology. It works better. So NPAR in the last few months has been getting all kinds of testing they're doing with major industrial companies, municipalities. This week they actually are now sending over, going over to see the Saudis. The Saudis want to look at their process. So they've gone from having a very good group of technologies to now having, I think you're going to get some significant sales here in the next 3 to 6 months. So they're going to become a viable commercial
Is this almost like a green, you think of chemicals in water, I'm thinking mercury, for instance. And is this almost like a green product?
I would say it is.
Marketing?
Yeah, it is a green company. There's no question that they've been working on processes for a while. Their best process took care of ammonia. And for a while, ammonia was something governments were somewhat concerned about, but now they've recognized they want to lower ammonia numbers. And as I said, they occur in a number of industrial and municipal activities across the world. So there's a great opportunity now, Pat, for these guys to become a commercial enterprise. That's the reason it's up on my model. It's the reason it's come up on my screen. And the reason I think at these prices, 11, 12 cents, it's a company that has some significant upside here in the next, I'd say 3-6 months here.
Well, I wonder if it brings in a different kind of an investor too, with that whole green thing.
It does.
What about, is it Bri-Chem?
Bri-Chem. Yeah, Bri-Chem, Pat, we mentioned this once before at $1.50. It went up to $1.80. It's now back to $1.50, $1.49. It's interesting how, again, we've seen a sell-off, and they're in the liquids business, which I just mentioned goes hand in hand with fracking. The Bri-Chem management, they used to be both liquids and steel. They sold the steel division, steel pipe division, so now they're only liquids. That's a great place to be, great leverage. And they went out and bought a lot of people in the last few years when they saw that this liquids market was going to really take off. So it's interesting, they've got now themselves well positioned to do very well in Texas, in the Bakken, and in Western Canada. Yet in the short run, the stock price hasn't performed quite as well as I would anticipate. But again, I think people are lumping all oil services in the same pot. It's time for them to recognize that if you're in the liquids business, you're still growing 20-25% a year.
Yeah, as long as things stay above 60, 65
Yeah, that's right,
bucks.
Pat. I mean, if we get down to an extremely low price of oil, although then I would say there's going to be incredible opportunities, because that's what happened back in 2008 when we got down into the 30s. We had the best buying opportunity on oil company and oil service companies than we had in probably 15, 20 years. Yeah. So I don't expect it unless we get a repeat of 2008, which I think is an unlikely scenario. But of course, anything's possible.
Is it ever? We didn't think 2008 was going to happen, right?
No, we didn't, Pat. Certainly not
Great.
to that degree.
And you didn't think 1,200 gold would happen?
No, I didn't, Pat. I'm only, Pat, on some of the commodities we have not been right this year. Others we have been. And you recognize where you're wrong and sometimes
Well, that's why
you're
you play the services as opposed to the commodities.
Exactly.
Because they should be there.
And again, while we're playing the services, we are playing here.
Yeah.
We're playing the guys that can make money at a lower price.
Mark, great to have you.
It's great to be here, Pat.
Mark Lackey, Executive VP, CHF Capital Markets.